So let's see how I engage this market. Remember, for my daily, so I hit for my H for down, so I hit 50. Okay, so a quick one. So this was Monday. This bullish candle here was Monday. So when I saw this bullish candle on Monday, already for a long time I've been anticipating that price would come and take out this equal high here, because we've had a breaking structure here. It failed to take out this low. So price went back to fill up the fair value gap, continued to break, went back to fill it up, come back again. Then we had a clean breaking structure on our daily time frame. Price took out this low. We had a clean breaking structure on our daily time frame. Price took out this low and took out this high. Took out this high. So we had a clean breaking structure. Price came back here. There was a zone here on the 4 hours. There was another block here attached to a fair value gap. So price came back to fill it up and kept moving. So I did a video on how I took this trade on Tuesday. Though I didn't take it up to this point, but at least I had my 1/5 minutes with ease. So this was Wednesday yesterday. I want to show you how I engage the market. I'm actually expecting price to get to this blue zone. So if I were you, I will not engage on any sell trade until this blue zone is filled up. And if you go to your 1 week time frame, you will see clearly that there's another block here. Can you see that? There's a block. It might not be another block, but there's a block here. There was a fair value gap here to be filled. So that was why all of this was taken out, because there was a fair value gap to be filled. So all of this was taken out. Fair value gap filled, a block here. So I'm expecting a little bit of retracement before market will continue to what? Come back into this fair value gap. We can call this a mitigation. No, this is not this is a breaker, because it took this high. So it took this high, took out this low. So we had a breaker block here. So this is a change in market price. You took it out with a body. You must understand how your candlesticks are forming. They mean a lot. If there is a breaking structure, you don't look at it with the wicks. You know a major breaking structure if it happens with the candle. So you can see here that price closed below this low with the body. That shows how intentional it is. Can you see? You see that this eye here was taken out by a wick. So wick by wick, body by body. Do you see that? This body here was higher than this. That was a breaking structure to the upside. You get? Can you see that? Wick by wick, body by body. Yeah. All I'm trying to say is that once you see that that the body of a candle closes below or above a high, that is a strong indication that that price is about to go further in that direction. So on our monthly time frame, I didn't intend to spend much time on this, but our monthly time frame, you can see, I think I did this analysis like last month. You can see it on my page. You can check the previous videos. You can see that price was rejecting from this fair value gap here. If I have a witness, let me hear you say yeah. Okay, so price rejected at this fair value gap here on the monthly time frame, came here, and within our daily time frame, remember within our daily time frame, we saw it was a clean breaking structure to the upside. So what do you expect? Ultimately, I'm expecting price to do this, to fill up this fair value gap here on our daily time frame. That is what I'm expecting price to do ultimately for this month. We already, this is just the first week of March, and we can see how huge this candle has become. So I'm expecting price to get here ultimately. It might not happen this week, it might not happen next week. I'm sure it will happen anytime soon. Let me show you how I engage the markets on Wednesday. So on Wednesday, which was yesterday. So on my 1 hour time frame, something quite interesting. Okay, I saw this, and as usual, I had to wait for a clean confirmation. That I went to my 15 minutes time frame. This was beautiful, guys. It was beautiful, very, very beautiful. So once again, what am I looking for? A continuation, a break in structure to the upside. Now I saw this guy happen here. He took out this liquidity, came to take out this low. This formed like a breakup block as though it wants to break to the downside. Return back to the other block and boom. But one thing I used to say, all of this happened when? All of this happened during Asian session. So how did I engage it? Seeing that market has been bullish for a while, and I had my fair value gap, multiple fair value gaps to be filled up both on the weekly and on the monthly time frame. So I was waiting for a continuation in breaking market structure to the upside on my 15-minute time frame for me to engage the price. Remember, from our weekly down, so we took from the monthly down to the weekly, from the weekly down to the H4, from the H4. Now we are looking for our entry on M15. M15, that is the 15 minutes time frame. So this is what I did. I had to wait to ensure that the Asian high was taken. Anytime your Asian session high is taken, you can be sure that that trade is about to you can be sure that price is about to go in your direction for the day. That is another code that used to engage the market. You can take my mentorship class, and I will reveal the secrets to you about how to navigate your intraday trading based on price action around Asian high and Asian low. Okay, so I saw this break structure here. There's the BMS here. That is the high of yesterday. This was the high of yesterday. This was the highest high that price got to the previous, that is on Tuesday. So price took out that high by a body. Can you see that? He didn't take it out by a wick. He took it out by a body, by the body of the candle. Inside was taken out. So what was I looking for? I was looking for a clean fair value gap. Can you see a fair value gap here? This high and this low, this high and this low. This is your fair value gap. Now there are times you intend to use just the other block. There are times price will get there, and there are times price won't get there. For this case, price had a pinch there. For some of you that is not using a zero spread broker, this wouldn't have taken you to that. You would have missed this entry. So what I do is that I try to use 50% of the fair value gap. You see this? I try to use 50% of the fair value gap. So that was how I caught. This beautiful setup on Wednesday. So my stop loss was somewhere around there. Yeah, 10 pips, guys. And remember, my target, I love to do 1:5, but I've said it earlier. For you, you might not need to do 1:5. 1:3 is a good setup for you. If you are using 0.5 of your account on a 1:3 trade, that is, you reach 0.5 to get 1.5%. Imagine you're having 1.5% 3 times in a week. That is 4.5% of your account 3 times in a week. Think of what that will do to your account in a month. If you are making 4.5% or 4%, including some losses, losses happen in the market, yes. So let's say you're making 3% in a week, 4% in a week consistently. Imagine what that will do to you. And imagine you're an expert and you're using 1% to take some of these trades. So 1% as your risks, 3% as a profit. Can you see how that was just on a trade? So imagine you just have 3 of that good trades in a week, or just 2 good trades like that, 2 good setup like that in the week. Just taking trades that follows the institutional order flow. That's IOF. Just 2 to 3 trades in a week. You're a boss of your own. That's beautiful, right?